All right, picture this. You're scrolling through your feed, seeing headlines about stock markets crashing, governments bailing out banks, or some new global crisis unfolding like a bad sequel. But behind all that chaos, there's this one massive player quietly calling the shots, or at least whispering in every ear that matters. We're talking BlackRock, the asset management behemoth that's got more money under its thumb than the GDPs of most countries combined. As of early 2026, they're juggling over $11 trillion in assets. Yeah, trillion with a T. That's enough to buy entire nations, influence policies, and make central bankers sweat. But here's the kicker. BlackRock doesn't just manage money. They run what I like to call the shadow economy, the unseen web of financial power where real decisions get made, away from the spotlight of elections or headlines. In this video, we're diving deep into how BlackRock went from a scrappy startup in the 80s to the invisible hand steering global finance. We'll unpack their secret sauce, like the Aladdin platform that's basically the brain of Wall Street, their cozy ties with governments during meltdowns, and why critics call them a shadow bank that's too big to fail, yet somehow never does. Drawing from real heavyweights like Larry Fink himself, whistleblowers from the 2008 crash, and analysts like those at the IMF who warn about concentrated power, this is no conspiracy rant. It's a forensic breakdown of facts, laced with the absurd ironies and epic fails that make finance so brutally entertaining. Because let's face it, if you're not laughing at how rigged the game is, you're probably crying. Buckle up, because by the end, you'll see why BlackRock isn't just investing in companies. They're investing in control. We'll trace the history, expose the mechanics, and tie it to today's messes, like inflation wars and geopolitical poker games. Here's where it gets insane. They don't even own most of what they control. They just pull the strings. Ready? Let's peel back the curtain. Hey folks, welcome back to Geoeconomics channel, where we decode the wild, weird, and downright rigged world of money and power. Today, we're tackling something that's equal parts fascinating and terrifying: how BlackRock actually runs the shadow economy. Look, if you've ever wondered why stock prices move like they're on puppet strings, or why governments seem to bail out the same fat cats every crisis, BlackRock's your answer. They're not a bank, not a hedge fund. They're an asset manager on steroids, overseeing trillions that touch everything from your 401k to global oil flows. But first, a quick shout out. If you're new here, hit that subscribe button for more unfiltered breakdowns on crises, cheats, and the absurd truths of finance. And drop a like if you've ever felt like the economy's a game you weren't invited to play. All right, let's jump in. Imagine a world where one company advises the Fed, owns stakes in your competitors, and runs software that predicts market crashes before they happen. That's BlackRock in a nutshell. Founded by Larry Fink back in 1988, it started as a risk management outfit under Blackstone. Yeah, that Blackstone. But they spun off in '94, and boy, did they grow. Fast forward to now, and they're the Godzilla of finance. Why? Because they mastered the art of being everywhere without being noticed. Here's the thing. In the shadow economy, visibility is a weakness. BlackRock thrives in the gray areas. So, how did this all start? Rewind to the late 80s. Wall Street's buzzing with junk bonds and leveraged buyouts. Think Michael Milken and the greed is good era. Larry Fink, a sharp trader from First Boston, sees the cracks. He's lost millions on bad bond trades, and he's like, we need better risk tools. Enter BlackRock. Black for Blackstone, rock for reliability. They launch with $1 billion in assets, focusing on fixed income. Bonds, basically. Boring? Maybe, but bonds are the backbone of finance. Governments issue them, companies live on them, and when they go bust, economies tank. By the 90s, they're expanding. They snag Merrill Lynch's investment arm in 2006 for $9.8 billion, then Barclays Global Investors in 2009. That's when they get iShares, the ETF kingpin. ETFs? Exchange-traded funds, baskets of stocks you trade like shares. Cheap, liquid, and BlackRock owns the market. By 2010, they're managing $3.5 trillion. Sarcasm alert, because of course, in the wake of the biggest financial crash in decades, the survivors get even bigger. It's like rewarding the arsonist for putting out the fire they started. But here's a relatable analogy. Think of BlackRock as the ultimate landlord. They don't own the buildings, companies, but they collect rent from everyone and decide who gets evicted. Their growth wasn't luck, it was strategy. Fink's a master networker, rubbing elbows with policymakers, whispering advice. Remember, this is the guy who wrote letters to CEOs pushing ESG, environmental, social, governance stuff. More on that later, but spoiler, it's not just about saving the planet, it's about control. Okay, now we get to the real magic, Aladdin. No, not the Disney version. This is BlackRock's proprietary platform, named after the lamp-rubbing wish granter. Launched in the 90s as a risk tool, it's now the brain of global finance. Aladdin crunches data on over $21 trillion in assets, not just BlackRock's, but clients like pensions, sovereign funds, even rivals. It simulates crashes, spots risks, and optimizes portfolios in real time. Think of it as Google for money. It knows where every dollar is, what it's doing, and what it'll do next. Here's where it gets insane. Governments use it too. During the Eurozone crisis, the ECB tapped Aladdin to stress test banks. In 2020's COVID meltdown, the Fed hired BlackRock to buy bonds, using Aladdin, naturally. Conflict much? You're advising the regulator while profiting from the regulated. Sarcastic aside, because nothing says fair play like marking your own homework. Imagine a dialogue in the Fed's war room. Hey Janet, markets are tanking. Call Larry, his machine can fix it. But Larry's firm is buying the dip. Details, details. Aladdin's like a shadow central bank with more data than the NSA. Analysts like those at Bloomberg have called it a monopoly on information. And in the shadow economy, info is power. BlackRock doesn't just predict the future. They shape it by knowing what everyone else doesn't. Speaking of crises, BlackRock's got a PhD in turning lemons into lemonade, except the lemons are global meltdowns, and the lemonade is billions in fees. Take 2008. The housing bubble bursts, banks go bust, Lehman collapses. Fink's on speed dial with Treasury Secretary Hank Paulson. BlackRock advises on toxic assets, helps unwind AIG's mess. They emerge stronger, snapping up bargains. By 2010, AUM doubles. Epic fail for Main Street, win for BlackRock. Fast forward to COVID-19. Markets plunge 30% in weeks. The Fed? They outsource bond buying to BlackRock, $750 billion worth. Fink's firm buys corporate debt, including their own ETFs. You won't believe this next part. They even bought junk bonds from companies like Ford while advising the government. Critics like Senator Elizabeth Warren screamed conflict of interest. But hey, who listens? In a leaked memo, okay, not leaked, but public hearings, Fink defended it. We're just helping stabilize. Translation, we're indispensable. And in 2022's inflation spike, BlackRock's pushing rate hikes advice while their funds bet against bonds. Geopolitically, they're in everything. Russian sanctions, they divest, but slowly. Ukraine war, their energy ETFs boom. It's like they're the house in a casino. They always win, no matter the game. All right, let's talk ownership. BlackRock doesn't run companies like a mob boss. They're more subtle. Through iShares ETFs, they hold stakes in over 80% of S&P 500 firms. Top shareholder in Apple, Exxon, you name it. Combined with Vanguard and State Street, the big three, they control 20 to 25% of votes. That's passive investing on crack. Billions flow in via 401s, Ks, BlackRock votes the shares. They push diversity boards, climate goals, ESG again. But is it altruism? Nah, it's influence. If a CEO ignores Fink's annual letter, shareholders notice. Imagine you're a puppet master with strings to every marionette. You don't perform the show, you just nudge. Take the 2021 GameStop saga. Retail traders squeeze hedge funds. BlackRock's ETFs hold GME. They profit quietly. BlackRock votes for green transitions while owning fossil fuels. Double dipping at its finest. Because why choose sides when you can rig both? Economists like John Coates at Harvard warn this concentrates power, stifles competition. In the shadow economy, BlackRock's the silent partner in every deal. BlackRock's not just Wall Street, they're global. Fink advises Biden on infrastructure, Trump on trade, bipartisan puppeteering. In Europe, they consult the ECB on green bonds. They launched funds there in 2021, navigating U.S. tensions. During the 2022 energy crisis, BlackRock's commodities funds explode as Russia invades Ukraine. They're in Saudi Aramco, influencing OPEC indirectly. Here's a recreated chat from a think tank. Larry, how do we handle inflation? Easy, hike rates, buy our ETFs. But that hurts workers. Brutal truth. BlackRock's on boards like the CFR, Council on Foreign Relations, shaping policy. IMF reports highlight their systemic risk. If BlackRock stumbles, markets quake. But they don't stumble. They advise on stumbles. In 2025's mini bank run, remember Silicon Valley 2.0? BlackRock's there, stabilizing with Aladdin. It's like they're the unofficial fourth branch of government. Okay, time for the unvarnished reality. BlackRock's not evil incarnate, but the system's rigged in their favor. They manage pensions while investing in companies that cut jobs. ESG? Critics like Vivek Ramaswamy call it woke capitalism, using investor money for political agendas. Texas divested billions in 2022 over anti-oil stances. They skim 0.1 to 0.5% on trillions. That's hundreds of billions over years. Passive funds seem cheap, but hidden costs add up. In 2018, a former exec sued over discrimination, exposing internal politics. Analysts at the Fed have papers on common ownership, reducing competition. Airlines hike prices cause BlackRock owns them all. They preach sustainability while funding polluters. In 2024's climate summit, Fink talks net zero, but their portfolio's carbon heavy. It's not hypocrisy, it's business. The shadow economy thrives on duality, public virtue, private gain. At $11 trillion plus, they're too big. If they fail, it's 2008 on steroids. But regulators? Crickets. Because BlackRock advises them too. Fast forward to 2026. Inflation's cooling, but recessions loom. BlackRock's pushing digital assets, crypto ETFs approved in 2024. They're in Bitcoin now. Geopolitics, Taiwan tensions, Their chip holdings, TSMC, make them stakeholders in peace. AI boom, they own NVIDIA, influencing tech policy. Here's the rising tension. As wealth gaps widen, BlackRock's passive empire funnels money to the top. Middle class invest via ETFs, elites reap dividends. Modern tie, student loans, they hold debt securities. Healthcare, pharma stakes. It's everywhere. If a cyber attack hits Aladdin, boom, global freeze. Fallout, more concentration. Lessons, diversify, question advice, vote with your wallet. But in the shadow economy, escaping's tough. You won't believe this, but BlackRock's already eyeing the next play, climate finance. Trillions in green transitions. They'll manage it. Or sovereign debt crises in emerging markets. Argentina 2.0, they're advisors. Because who better to fix debt than the debt enablers? Geopolitical wildcard, US-China decoupling. BlackRock's bet both ways, but if trade wars erupt, their portfolios swing billions. Analysts like Nouriel Roubini, Dr. Doom, warn of megathreats. BlackRock's at the nexus. In a hypothetical boardroom, Larry, markets are frothy. Buy the dip with client money. Epic fail incoming? Maybe quantum computing cracks Aladdin, but they adapt. That's the absurdity. The system's built to protect giants like them. The brutal truth about BlackRock is they're not running a conspiracy. They're running the system. By controlling data, votes, and advice, they shape the shadow economy where real power hides. It's not about evil geniuses. It's about incentives gone wild, where size begets more size, and everyone else pays the tab. Knowledge is your edge. Next time you hear market forces, remember it's often BlackRock's forces. Diversify your investments, question the narratives, and maybe even lobby for antitrust on asset managers. In a world of rigged games, clarity's your cheat code. What's the next domino? AI overlords or green bubble burst? Drop your thoughts in the comments. Who's the real puppet master today? Smash that like, subscribe for more raw breakdowns, and share if this opened your eyes. Until next time, stay sharp, stay skeptical. Peace.